Welcome to OJ Spend Money. Please note, this content is for education purpose only. We provide news and facts and not financial advice. Always do your own research and consult a professional before making any investment decision. Welcome back to your daily market command center. I am bringing you the hottest updates from the Dalal seat as we witnessed a spectacular comeback story today. Here is what moved the market today in today's session. Sensex rebound with authoritative gain by 0.73% and Nifty reclaims 25,200 level by gaining 0.68%. And Rupee shows a strength and the US and INR dropped by 88.08 and due to its Fed rate cut hope. And the gold hit a all-time high with a gain of 0.88%. I like to add there is always a correlation between the dollar and the gold. That is an inverse relationship. As the dollar weakens, gold strengthens its position. Next, we will look into the main reason for the surge in the Nifty and Sensex. The two main reasons for the surge in Nifty and Sensex are auto and infrastructure stock lead the change and the global market provided positive cues ahead of the Fed decision. Next, we will look into the positive impact, and the first one is the Fed rate cut euphoria. The market rallied on 97% probability of 25 BPS Fed rate cut on September 17 to 18. The global liquidity flow expectation boosting the emerging market appeal. And two stocks which are related to it that got impacted are Kodak Mahindra, which is increased by 1% and the ATS increased by 1.1%. Main reason is lower US rate means cheaper dollar funding and increased FOI inflow into the Indian market. Next is the auto sector renaissance. The sector outperformed with 0.67% gain on the festive demand expectation and the GST 2.0 hope, and also the India-US trade talk optimism. And the stock which got highly impacted today are Mahindra and Mahindra, and it is surged by 1.24%, leading the pack. And main reason for its surge is due to the festive season demand pickup and the potential tariff relief from the US trade negotiation. Next on the positive impact is infrastructure boom. The government capex spending continues supporting the infrastructure players. The focus on India-US bilateral trade talk boosting the sentiment. And the two stocks related to it which got impacted are L&T emerged as a top gainer with a 1.50% jump and the Adani port gained by 0.90%. And the main reason for these two stocks surge along with the news is due to the strong order book visibility and the government infrastructure spending commitment. Next is the power sector momentum and energy transition and the renewable focus driving the power stock. Green energy push and the government policy support made the NTPC gained by 1.20% on the strong quarterly performance expectation, and also due to the renewable capacity addition and the consistent power demand growth. Next is a media and telecom rally. The media sector led a gainer with 1.08% surge, and the digital transformation and the content monetization trend made Bharti Airtel participated in the broader telecom upstick. And the reason for the Airtel upstick is due to the 5G rollout progress and the improving average revenue per user trend. Next, we will go into the negative news and its impact. On the negative news, first we have the paint sector pressure. The Asian paint led the user again as its market share declines and also margin shrink. Today, it declined by 0.59%. And also the other reason for the paint sector pressure is rising raw material cost impacting the paint manufacturer. The broader paint sector is under pressure from the input cost inflation and the crude derivative prices affecting the margin and demand slowdown in the real estate. Next, the IT sector are cautious, whereas technological stock faced a selling amid the global uncertainty. The HCL Tech fell by 0.45% on the client spending concern. There is a broader IT sector that showed a mixed performance. The US recession fear impacting the client discretionary spending and the project delays. Next is the consumer discretionary weakness. The Titan company declined by 0.27% on the luxury spending concern. Higher-end consumer goods facing a demand pressure and the luxury and the discretionary spending category are under stress. The economic uncertainty affecting a premium product demand and the gold jewelry competition. Next on the banking sector, we saw the mixed signal, whereas HDFC Bank and the SBI showed a weakness despite a sector gain. Already we saw that Axis and Kodak Mahindra had shown a gain today, but the HDFC Bank and the SBI showed the weakness. The main reason for it is due to the asset quality concern and the margin pressure. HDFC Bank is declined by 0.26% and the SBI declined by 0.13%. And the main reason is due to the net interest margin pressure and the cautious lending approach. Next, on the negative news, we have the FMCG sector stagnation, where fast-moving consumer goods are not moving fast. The main reason is due to the rural demand recovery slower than the expected. And due to this, the FMCG sector declined by 0.03%. And the main decline is on the stock HUL, and it is declined by 0.10% on the volume growth concern. And the reason we already saw, it's due to the rural consumption challenge. And the next one is the urban premium segment saturation. Next, we will look into the global market movement in the last 24 hours. First, we will check on the US market. The Dow Jones surged by 0.11%, and the reason is Fed rate cut optimism and the TikTok deal progress. Next is S&P 500 surged by 0.47%, and the reason for it is tech rally ahead of the Fed meeting. Next, Nasdaq gained 0.94%, and the reason for it is semiconductor strength and the AI optimism. Next, we will look into the Asian market, and on Asian market and on Japan, we are seeing that Nike 225 gained by 0.30%, and the reason is yen weakness supporting the exporters. Next, on the Hong Kong market, Hang Seng increased by 0.22%, and the reason is China trade deal optimism. And on the UK market, FTSE 100 declined by 0.19%, and the reason is BOE policy uncertainty and the inflation concern. BOE means Bank of England. And on the European market, the DAX declined by 0.33%, and the reason for this is ECB policy divergent concern, as the ECB is planning to hold the interest rate, but the Fed is expected to cut the interest rate. Next, we will look into the critical event ahead. First is the US Federal Reserve meeting, which is to be held on September 17 to 18. And on this meeting, the probability of rate cut is 97% for 25 BPS rate cut. And there is also slight potential for larger 50 BPS rate cut. And on September 18, we will be getting the US initial jobless claim, and it is a labor market data crucial for the Fed rate decision. Next, on September 20, we are expecting a India manufacturing PMI, and it is a key indicator of industrial momentum and the domestic demand. Next is India-US trade talk, which is ongoing, and the potential bilateral trade agreement without a punitive tariff will boost the Indian market. Finally, I will close this summary with 3 takeaway and 3 risk checklist. The top 3 takeaway for today of Fed pivot probability. There are 97% chances of Fed rate cut driving a global liquidity towards an emerging market like India. Sectoral leadership shift, auto and infra sector reclaiming the leadership from the defensive FMCG and pharma. Currency tailwind, rupee strength and the global rally creating a favorable condition for the domestic consumption. Next, we will look into the key risks that should be on your checklist. First one is the valuation stretched. Nifty PE remains elevated despite a recent correction limiting the downside production. FII selling pressure, foreign investors sold 1,269 crores in the cash market, continuing the outflow trend. Next is a global trade uncertainty, the US-China tension and India tariff concern creating a policy. Thanks for watching the video. If you found this briefing helpful, smash that like button, share it with your fellow investor, and don't forget to subscribe. I am always open to feedback. Please provide your valuable feedback in the comments. Thank you.